Hey, what's up everybody? It's Omar. It is Sunday, May 6, 2018, 10:18 a.m. And I'm making a video real quick about my watch list for tomorrow. Now guys, there are like a million plays. And obviously, you can't trade every stock, right? You can only trade but so many tickers. And I want to address a couple of things. So, you know me, that I love short selling. That's my edge. And I truly believe that's the edge when it comes to stock trading. But that doesn't necessarily mean that you have to be a short seller if that's not your strength. You can buy breakouts, which I also talk about because that's a misconception that I don't talk about buying. Friday I told you guys on Friday, not many people paid attention to it, but on Friday I had said, let me go here. I had told you that if, where is it? Just to show you, this was all timestamped too. And I said this way before it happened. But I told you, let me see where I can find it. Let's see if I can find where I was talking. Oh, here it is. MRO. If MRO can hold 1952, can go higher today, right? I said that. All right. I said that Friday morning, right? Just to show you. And I'm not always talking about, short selling. Now, why did I say that? All right, let's talk about the chart. You guys know how I feel about buying breakouts, right? I always tell you, like, you hear morons like Tim Sykes and Warrior Trading that tell you to buy the breakout, which is totally ridiculous. You don't buy the breakout. You want to make sure that you look for a retest of the breakout level and see resistance become support, and then you buy. Because otherwise you chase and then you become a bag holder a lot of times, right? And why was I saying that? Which, when I said 1952, I meant to say 1951. Why? Because 1951 was Thursday's high. That's why. And look what happened Friday. So Friday the market opens, it sells off. This is a 5-minute time frame. So let me just do like 3 days. We'll do like 2 minutes. Okay, make it easier for you guys to see. So, right, that was the high. So, pre-market, it starts gapping. It gets to a high, I think, of 1959 at that point, right? Now, what happens when the market opens? Market opens, the stock tanks, right? So, in theory, you could have shorted, risking 1951. Once you saw, look, it was acting as resistance at this point. Look at that, gap down, popped up, couldn't break that 1951. You could have went short here. And it went from 1951 to 1929, and then it just fucking ripped, right? But in that quick, now when you have an account like size like mine, you're gonna start taking 2,000, 5,000, 6,000, 8,000, 10,000 shares quick in and out. Now the thing is, when you get your over the PDT rule and you got, like, let's say 25, 30,000, 40,000 in your account. You get that leverage, so you can borrow 3, 4, 5 times whatever's in your account. You want to have a broker that you can execute your shares quickly. So Thinkorswim is absolutely not the broker that you want to use if you want to size in and out quick. All right, E-Trade is somewhat good, but I still wouldn't go in like 10,000 shares on E-Trade either, because there's just so many platform issues with E-Trade that you gotta be scared. That's why I like trading the higher price stocks with E-Trade, because I know I can get points and I can take 1,000 share positions, and on 1,000 shares I can take 2 or 3 trades on a stock and make $4,000, $5,000, $6,000 in a day. But once you get a bigger size account, you want to use like Interactive Brokers, or to me Centerpoint, which the executions are lightning fast. That's why you see all these big traders on Twitter using Centerpoint. Not even if they are not like super short bias with the low float penny stocks, just from an execution standpoint, they're fantastic to get in and out of trades with a lot of size. So that's what I recommend you go with once you get your size, your account size up. But look what happens, guys. So the stock breaks 1951, right? And yeah, you could have chased and you could have got executed and you could have made some money fast. But the smart trader waits for the breakout to happen, and then you want to see a pullback. And look what happens. The stock literally breaks below, again, 1951. gaps up above 1951, and then look, finds a support here, and then look, the reason why this thing started ripping is because the smart buyers waited to see the test of the previous day's high before they bought, and then they went long, you know. And when you see a trend like this, you should definitely be using trend lines. So what I like to do is, like, if I see a trend, I'll put a trend line, and as long as the stock is in a trend, I'll ride the trend. And I'd rather use that than fucking EMAs. You know, people use 9 and 20 EMA, and that's fine. You know, I used to use them too, but like I said, I like using price action. I like using trend lines. I just to me, it just works better, you know. And you know, I can only use E-Trade. I don't have access to all this shit at work anymore, unfortunately. So I really got to be real mindful of what I'm doing when I trade, you know. And that's how you should trade. Now you say, Homer, how do you make this extend? Well, guys, come on, man. You gotta like play around with this. Like, most of you guys are young. You guys should be figuring this shit out. If you go to edit properties, all you do is, you see it says right extension, left extension, just put them on. And then that's all. And then you just hit save as default, make it whatever color you want, make it whatever width you want, and then you just hit OK. And then what happens is, now when you put a trend line, it extends it both ways. That's it. With the price level, all I'm doing is right clicking. Okay, when I right click on it, I just go right. You just go to edit properties, and I just do extend on right, and I put show price on left. That's it. I mean, I get all these questions about this shit, and it just boggles my mind that y'all don't try to play around with it and figure it out. Like, try to figure it out, or call Thinkorswim. I don't understand. Like, you know, you gotta put in some of the work, and that's how you learn it. Honestly, like when I teach, I train some of the top surgeons in the world, like the top surgeons in the world. And I told them, like, we're going to go through this, but you're not going to retain this until you really start doing it, you know? And that's kind of how it is with everything in life, you know? So, you know, so that's when I talk about buying breakouts. And that's what I meant by if it held I put 1952, and I really meant to say 1951. And that's when you buy. So what happens is, you should always put an alert around a level just to, like, and then Thinkorswim will alert you. That's why I love Thinkorswim charting, because it keeps you disciplined, where you're just not chasing. You're like, all right, I'm not gonna fuck with this stock unless it holds that 1951 level, you know. And that's kind of how you do it. All right, now let's talk about the watch list for Monday, so for tomorrow, right? So sorry about that. So let me pull up the big chart. So with a chart like this, right, RNN, right, it's probably dog shit. It's probably going to go back to nothing. Its average daily volume is 250,000 shares. But for you dip buys and you guys with small accounts, this is what you got to look at, all right? So this stock over the last year, it's gotten as high as 474. And sometimes you can go back. I like to go back as far as 10 years sometimes, even further if I need to kind of just see where the stock has been over its lifespan, you know? This stock at one time was at $17, and you can see it can't hold shit. It always goes down to nothing, and you know, it's been as low as 36 cents, to believe it or not. But it's been kind of holding this 120 kind of range for a while now, right? Now, what you can do is, let's say you go, oh my, I got a small account. I can't really, you know, short, you know, and it's not my thing, whatever. Okay, that's fine. So what you would do is, for one, you got to see that, make sure that there's volume coming into the account. Like if the market opens and this thing has less than 10,000 shares traded or 20,000 shares, and you know, you want to stay away from it because it's not liquid. But this is how you do it. So obviously, if it breaks 230, it rips and pulls back and holds it, then you can get in at 230, risking 230. Or the previous support level below, which is 218, you know. Now let's say it tanks at the market open. So what you want to see is how it's going to react to that previous support level of 218. All right, of 218. And I know because look, I just look at the candle and I can see over in the right, on the left, it says low 218, low 218. So that's how I know that 218 is a clear support level. If it can hold that 218, then I can buy it, dip buy it, risking 218 or risking the previous low of 205. Because when I zoom out, look what happened. 205 was the high. Okay, actually, I put 205, but I think I fucked up. This is actually, oh no, it's 205. It is 205. Yeah. So 205 was the breakout. All right, price. Okay, that was the high before it broke out. That's it, guys. That's it. So if it held to, let's say, you know, short sellers come in, they drive it down, they see it kind of holds 205, they're going to cover at 205 because it's not breaking down, and you get a short squeeze and you ride that squeeze. And that's how you trade these. That's how you trade these, guys. That's how you do it. Next up, CLWT. All right, so let's look at that. Now, this fits perfectly into my short into resistance strategy. Now, let me pull up the 1 year. Now, you got to be able to find shares to short, but let's see what happens. So, this stock, right? Piece of shit stock, right? That gapped up to from, you know, it opened at 230, went to a high of 845, right? And then it had the first red day the day after, right? You know, it looked like the bulls barely won that day. That wick tells you that it's weakness showing. And then it had the red day the following day, right? So, now, what we're looking, right? This stock, we know it's going to go back to nothing. Now, what I want to see is, okay, right? So, Friday, people, right? What happened was, look at this. The stock gapped up to 845, right? Tanked, and look where it held. The breakout level of 480. All right? It couldn't break below it. So, what happened was, shorts were like, fuck, I don't want to hold this overnight. So they start covering their position. That's what causes the squeeze. All right. Then the pre-market, what happens is, you know, it can't even get back to the high. Look at this. It can't even get to this low high. Look what happens here. Let me, oops. Look what happens. It can't break this level right here. It touches it, right? Look at this candle. This is the lower high of 825. Look, it tests 825. All right. And I had 824, but it's actually 825. Right. And look what happens. Kind of double tops and then it collapses. Look where it found its support. The previous breakout level of 345 on that day. Because at first it was 345 where it broke out, came down, formed a lower high, then broke out at the next high, which was 415. So now it's at that 345 level. So this, you could play this two ways tomorrow. All right. If that's only if an opportunity presents itself. People who shorted, right, who shorted Friday are holding their position. If they don't see that this is going to break 345 pre-market, they're going to drive the price of the stock up because they're going to cover it pre-market. Now, the smart play would be to see how it reacts to overhead resistance. So to see how it reacts at 480 and then 585. And look, I marked it there because of, it's actually 585, 586. So 586 is actually what I put. I put 585, but it should have been 586. So you want to see how it reacts. Now, it'll spike, and more than likely, it's going to get rejected into one of these areas so that you can go short risking off of. That is how you make a killing in the market, guys. I'm telling you. That is how you make a killing. But let's say, for whatever reason, it breaks it, right? And it starts ripping. It's not going to break 845. But let's say it did. Let's say it just went crazy tomorrow for whatever reason. Some bullshit press release comes out and it breaks 845. You know what's going to happen? It's going to run and then it's going to pull back. And if it holds one of these levels on the reversal, this is where you could dip buy it. And that's what you do. That's what I mean by buying dips. You know? That's what I mean by buying dips. All right? So tomorrow, though, to me, the smart plays, if you can find shares to short when they may not be available, is see how it reacts. If it's morning spikes, and then short into a rejection of one of these levels if it can't hold. It's that simple. That's simple, guys. It's that simple. That's the shit that Tim Sykes don't teach you, that none of these fucking guys are teaching you, man. They don't teach you the technical analysis. They don't really teach you how to look at charts, how to really map support and resistance on a chart. They don't go into that level of detail because they're not teachers, guys. These guys are just guys who learned how to trade, and they're just trying to get rich off you. They don't, you know, they're not real teachers. They don't give a shit. They know that you're probably losing all your money. They don't care. And I don't understand these kids. They all want to retweet when they make a quick $100 profit. Thanks, Tim Sykes. Like, you know, like all of a sudden they got it figured out, and then the next day they're going broke, you know? You know, they don't know what the fuck they're doing, most of these guys, you know? You know, it's fucking crazy, you know? And the reason why some of these guys like Steven Dux is making so much money is because when he takes a short position like I take on the same stocks, he's going in 20,000 shares, 30,000 shares, 40,000 shares short. Now, yeah, you could make a lot of money if you have that big size, but you're also going to lose when it goes against you. So that's the risk you take. So yeah, he's posting those wins, but he's not posting his losses, you know. So trust me, he's taking big losses too. So it's, you know, you got to be careful when you go short. I'll be honest with you. You know, one person that a lot of people shit on, and I think he makes great videos, is William Carriman, that young kid who primarily shorts. He really watches videos because he really explains things exactly like I do, like short as close to resistance as possible, so your risk reward is good. You know, like, you know, very, very smart when he explains. I know people have a lot of issues with him, but the way he's explaining his videos, very good job. Anyway, so let's talk about Cassie. I just want to talk about like dip buying. Okay, so Cassie, over the last 5 days, right? This thing went down to 655, right? And then it started ripping again. And, you know, over the last 30 days, oops, let me pull up a 5-day, 30-minute chart just so you can see. This is a stock that's been, you know, kind of, you know, been up and down. Ah, shit. That's kind of been up and down, right? Got up to a high of 759, then found its support at 535, and then it's been consolidating, and now it's moving up the next level high. Now, all right, I'll start this because I wasn't even going to use this as an example this far back, but okay, look at where support was previously in this stock, right? When it gapped up to 759, it's pulled back, and where did it hold? 585, which was when it broke below, the last time it dipped, it held that. So dip buyers bought it. That's what I mean by buying dips. You want to look for stocks that hold a support level to risk off of. And then you're going to say, what, do I risk that 585? Yeah, you could, or the next support level below. So you got to look and map to see what that next support level below that 585 is. And to me, it looks like it would be here, that 534, like see? Because if you look at this, this is the high of that candle, and you see the consolidation here. The low is 535, the high here is 534. So you can risk that level. But really, where I was going to look at was a more recent time frame. So let me do the 5-day, 5-minute. All right, so now the stock over the last 5 days went from 655 to 842. Now, right? So it's at 842 currently, right? And it pulled back, and it's holding this 784 level. Oh, before, I'm sorry, guys. Before I do that, the stock spiked here, and it held 832. Look what happened, guys. The stock pulled back, and where did it find support? Well, on May 2nd, the high before the breakout was at 759. It dipped below it just for a second, but look, it found its support here at that 859. You could have bought the dip, and then it's just you sell into rip. Now, guys, you should always be selling into strength and never into weakness. If you're dip buying to day trade, if you're gonna be holding your position, then you know you hold it and you just ride the trend and you see how it's trending. You know, you pull up the 1 year and you see how it's doing. Now, but for day traders, you're just looking for it to where it's good, where it's a clear support level to see if it holds. You just buy, risking that level. That's it. That's all it is. So right now the stock is at 842, right? It pulled back. It's holding this 784 level. Now what I want to see tomorrow is, right, let's pull up the 1 year just to see the daily, right? It's been on this uptrend, okay? It's kind of like flagging here. It's consolidating here. It could be ready to move up. But, or it could be ready to pull back again. All right. Now, what you want to do is, for me, I want to see how it's going to happen. So people obviously shorted, and they probably held their position over the weekend, and they're going to see, all right, is it going to hold this 784 level with this clear support, or is it going to break down? And they want to see how it's going to react to, like, let's say 771, which would be a level below it, or 759 to me, which is the clear level below that right here. You see, because this was the breakout level. That's why I have 759 as the clear support level, because that's where it actually broke out. All right. So now what I want to see is it gonna spike? So I'm looking to see if it spikes and it can't hold, let's say this hot like consolidation level of 815. I'm gonna take a short, risking 815 or the next level above 832, or maybe even higher day. All right. Just really depends on what your risk level is. All right. But let's say it breaks down and it finds its way back to the 759 and it doesn't break down below it. That's a good dip buy opportunity for you guys. That's how you got to use this, and that's why I tell you guys, map your support and resistance levels, because it keeps you disciplined to know where you could potentially buy a stock or sell a stock or short a stock. I always use this. 10 years from now, I'll still be using trend lines. I can look at the chart now and kind of figure it out, But I don't care. I like using the lines because it's a visual cue. It's like an anchor for me that lets me know when to take a trade. So that's what I'm looking for that in terms of that tomorrow. Tomorrow, like it's another stock that red to green move has been crazy on I mean, this is this total manipulation. It's just been running wild. And I got so many lines ripped in here, but you know, this stock found its low at 883 and then it squeezed everybody up to 1386. It found its support. Look, the breakout level. This was the breakout level, 1160. Couldn't break down. So short dip buyers saw that and they went long on it because they saw that it couldn't break below 1160. That was the breakout level. That's where people saw it, found its support, and they went long. But there's a lot of overhead resistance, you know, so it's going to need some volume. Well, technically, but this stock is not acting rationally, so you got to be careful when you trade this. Now, what I'm looking to see is, right, it spiked, but look, it can't break that consolidation level of 1257, and that's why I got 1257 here, because you can see how it where is it? So, you know, it touches here, like it consolidated, and it broke down. You see how it here, it's the high and the low, and then here you see how it touched it before it ripped. That's why 1257 is such a key level. It's a key number to me. And look what happened. It got there and then it broke down. So on Friday you could have shorted this, risking that 1257 level. So that's what I want to see. I'm hoping that it's going to, you know, spike and then get rejected again and then reshort it there, risking 1257 or an area above it. Now you're gonna say, well, Omar, what if it holds 1257? Then take it long, risking 1257 with the potential exit of that 1303, because that's the next key level to me, you know, right here. But you know, there is some consolidation here, so it could get rejected in this 1270 in this you know, what's it low here, 1270 level. So you got to be careful, you know. But obviously this stock doesn't seem like it wants to die, so if it does sell off tomorrow, you're probably going to have a dip buy opportunity somewhere in the 1103 mark or the 1071. Especially, that's a key level, because look, there's a lot of consolidation in this 1271 level. And that's how these guys who you pay a shitload of money to should be teaching you. They're not teaching you like this. They're not. Listen, man, whatever. I'm not going to even go into no rant. But these guys are all full of shit. They don't know how to teach shit. IMTE, man, I told you guys the other day that this was a short seller's dream. Why? Because this stock, now if you could find the shares to short, E-Trade didn't have the shares to short. Otherwise, I would have been shorting this. This shit went from $1 to $44. That's insane. It's not gonna hold, right? So you guys know what I like to short after first red day. Well, look what happened, guys. So if you see, right, Friday it found its low of 1685, right? But let's assume, right, that $44, that's when it hit $44 like 2 days ago, right, on May 3rd, right? So it kind of like, you know, found its support here and it held it 29.89, you know, kind of gapped up into the close and then broke down. Look what happened, guys, pre-market. Look what happened the next day. Stock spikes at the morning. Where it get rejected? The fucking support level, 29.89 the previous day. You could have went short there risking that. And look, it spiked up and retested it and it's holding. Now what's going to happen is tomorrow, if you could find shares, I know Interactive Brokers had shares. Guys, if I was you and you have Interactive Brokers and you're comfortable short selling, tomorrow at 5 a.m. be up and reserve shares to short if they're available. And hold this shit, because this shit is going back to $2. If you can get even like 500 shares, I mean, you're gonna make like $10,000 shorting the stock. I'm telling you, you're gonna have to pay interest on that, but in the hard to borrow for people, who gives a shit? Because after it's all said and done, you're gonna still be very, very profitable. Now, what's gonna happen is more than likely is that if this can't break this low, right, which is a support level of 17, I have 1695 here, but this is actually the low here is 1702. So I need to fix this. 1702. Okay, if it can't break 1702 below, that's what's gonna happen. Those short sellers might cover, right? And then what's gonna happen is it's probably gonna get rejected into this $21 level where there's a clear consolidation. It'll go down from here, go to here, boom. it's gonna reject that and keep tanking. I bet you that's what's gonna happen. It's either gonna get rejected here or it's gonna get rejected back at that 29 level for you could do a short. And that's how it works, guys. That's how it works. All right, that's how this shit works. Okay, all right. You know, look at this consolidation level here. See, look at this right in here. Look at that. See, that's what you want to look. You want to find a clear consolidation level to risk off of. All right. Okay. And that's how it works, guys. That's how all this shit works. All right. So, all right, keep that in mind. All right, IMTE. If you can find shares to short, you're gonna make a lot of money. Unfortunately, I'm with E-Trade. I can't do it. So, XPER. I just put this on my This is so. Sometimes I'll put stocks on my watch list just to put them on my watch list. Right now, I'm only gonna trade like 1 or 2 stocks. I can't watch them all. But it doesn't hurt to put this. Now, this is a shitty stock. Barely ever trades, but 339,000 shares. But it traded 1.5 million shares. Now, what I want to see is what do I got to lose by checking out? Tomorrow, right? I want to see it spike and either get rejected at 2045 or 2070 because these are the areas of overhead resistance. And if it can't hold this, guess what? I'm going to short risk in one of these levels. Even 500 shares. This shit might go back down and break 1925. Now, if it held it, this is where I would cover, and then I could reverse my position and go long. All right? And obviously there's some overhead resistance here too, right here. So this is another area where you would map. What do you got to lose? Nothing. All right? And sometimes I'll just put them on my watch list because it's such simple technical analysis, such simple, easy trades to take. Now, you're going to say, well, what if it held 2070? Then you can go long, risking 2070 or the previous support level, 2045. And that's it, guys. That's all it is. Next up, NCR. Now, from a technical standpoint, I like this chart too because, look, this shit gapped down from 31 to 26, right? You don't think it's, potentially any stock could fill a gap in a day, but that's not what generally happens. Now, if you look at the chart from a yearly standpoint, this is a stock that was at $43 and it's just been on this downward trend ever since, right? Now, if you sometimes what you could do is you could go back, I'll go back 10 years and look at the chart and say, all right, this is a chart that's, all right, it's been much, much lower, all right? And it's been all the way down here at $15. So you want to say, okay, what is the next level support below, consolidation level? So if I'm looking at this, to me, right here at this 2473 level, because I see this clear, bounce off and then it continued up. So what I would do then at this point is, all right, I see what's below, right? The clear consolidation below. I want to see what's going to happen. Right now it's at 2770. I want to see how it's going to react to the high of 2799. Now, if it broke it and held it, shit, I'm going to go long, risking that. Why not? And then the overhead consolidation resistance level above, when I look at it, is this level here. This is a good level of consolidation right here, which is 29.89. That's why I mapped this, even though technically, to be honest with you, you got to use this too as well. You can't ignore this. So I would and obviously I'm just gonna do this here. It's, what is this, 29, it's actually 29.20. I put 29.15. But you get the point. So 29.15 would be my price target if this held 27.99, meaning it have to break out, pull back, either form a higher low or test this for me to go in. And that's what I'm looking at. But if it rejects the 27.99 level on a spike, guess what I'm gonna do? I'm gonna short it, risking 27.99. That's it, guys. That's it. And my price target would probably be this $26 mark. So shit, and me, a stock like this, with E-Trade, I'm gonna go in like 3,000 shares. So I can get $6 grand. And nobody's playing these. I guarantee you, nobody in Investors Underground, nobody in Tim Sykes chat room, none of these guys. I trade stocks that nobody looks at. When I gave you guys MC, what was it, a match the other day? That was on nobody's radar. That shit dropped 13 points. All right? ESPR, nobody was talking about ESPR when I gave you guys this shit. This shit dropped like, what, 5 points that day? Come on, man. I'm killing it. Nobody's fucking with me right now. I'm telling you guys, you don't have to. Don't be a sheep. Don't think I got to do what everybody else does. Just look at the charts and you'll find your edge. What I'm teaching you something that honestly I could be charging a shitload of money to be teaching, because I'm teaching you a simple, easy winning strategy. All right, and I'm looking at all kinds of charts. All right, things that nobody else is thinking about, because those kids that are in those chat rooms that are doing well, the ones that are doing well in there, were taught by their guru. So they kind of follow their guru's thing, and they always, most of them follow the low flow, penny stocks, which I trade too. Don't get me wrong, I love them. If I could, I love shorting into resistance. That's like where you make a killing. But I can't always do that. So I trade my edge, and my edge is shorting, these stocks. Like, look, G, this is a stock. Look at this beautiful technical chart to easily take a short or go long into. So this stock went from $32 to $29. It could potentially fill the gap tomorrow, right? But more than likely, it's going to get rejected here. I got to put right here too, another key level. So what I'm expecting to see is, all right now it's at 29.63. I want to see it break and go and short into resistance. There's a lot of resistance here at this 30.19 level. If it can't hold it, I'm going to short, risking it. Now, if it held it, I would go long, risking 30.19. All right, if you're long biased. All right, but more than likely what's going to happen is it's going to get rejected into one of these levels, and you could take a short position on. And the stocks, all these stocks that I'm putting on here are all easy to borrow. That's the beauty of what I'm teaching you guys. What like Cameron Foost and the Investors Underground guys and a lot of these guys don't tell you is that a lot of these low float stocks that they like to short, they are hard to borrow. I mean, you got to pay shares. You got to be able to find the shares to short them. And not everybody has the brokerages to do it, So, that's something that they don't really tell you, They got the big accounts, so their trading is different than yours. Now, this was another monster play on Friday that I put on the watch list, but I was like, I'm not too sure about it. And, bro, look at this. All right? Like I said, men lie, women lie, numbers don't. Look what I mapped this out for you. I created a video showing you mapping all the support and resistance lines. Look what happened, guys, here, right? So this was a gap down, and that's why I was on the watch list when we created the video on how to, build this watch list and how to find the stocks. Look what happened when the market opened. The stock got tanked right into this key resistance level. Look at this. You could have took this short right here, risking 56.71, and I'll just put a 1 minute. Let's do a 5-day 1 minute. Oh shit, let's do 3-day 1 minute just to show you. 3-day, I'll just do 2 minutes. There you go, 3-day 2 minutes, just so you can see, because you had an opportunity to do it. Look, stock market opens, stock spikes, can't hold this. This is very bearish. You could have went short, and you could have got fucking how many points? 50 from 56. It bottomed at 53. All right, 3 points. A guy like me would have took 1,000 share position in this, and I would have made 3 grand just like that. Boom. And then I could have reversed it here when it found its support, because look, this is basing off the previous days. This was the high that previous day. It broke below it for a second. This is the 50 simple day moving average. That's why I like using simple moving averages, because sometimes they stocks really do bounce off simple moving averages. But I prefer, support and resistance is really my key entry. And look at this. It consolidated this key area where if you saw the volume coming in, right? And volume is critical, right? If you're looking at the volume, right? So you see, all right, here's the average. It looks like, this is like kind of where the average volume is at this point. So you could put a trend line here, and then look, you get this volume surge right in here. Boom. And the stock gaps up. Look where it gets rejected, guys. It can't hold this. So you see it breaks above it, but the candle is not showing that it's bearish. And right in here, you could have went short risking that, and you could have got yourself reshorted. And trust me, the shares would have been there. You could have got another, and I fucked this up. I mean, I wasn't even paying attention to this. I was a fucking idiot. Another 5 points, 8 points. You know how much money you could have made trading this on just 1,000 shares? If you could have shorted here, covered in here, and then reshorted, about 10 grand. All right? So this is a volatile stock. All right? This is a volatile stock. And your risk is minimal because you're not going to short unless you're at one of the key areas, or buy or dip buy unless you're in one of the key areas. That is critical, guys. You do not just trade to trade. You don't want to chase a stock. Like if it's in this range here, you don't fucking go long in here. You're not based, this is it's too far away from your level. So you don't want to chase it. you're gonna lose your money that way. Yeah, maybe you get lucky. So, but that's not the way to trade. You want to trade off a clear support and resistance level. Risk management is what's gonna keep you in this game. Otherwise, you're gonna go broke. So what I'm looking to see tomorrow, hopefully, like, look, this stock has been on this crazy downward trend. I know nothing about the company. I don't care about the company. All I know is that there's clear support down here in this $49 level. So my guess is that it's gonna, look at this, it bounced off the 300 SMA right here, which is pretty interesting. But my guess is this is gonna keep tanking to 49.28, and that will be a key level to potentially dip by it if it held it. And then maybe it starts going on a rip again. Who knows? But my hope is tomorrow it does what it did Friday. Fucking rip and get rejected right back at this $56 level. And I'm going to short it. This is probably going to be the #1 watch for me tomorrow because of the volatility. And I want to see if is it going to attempt to get back to the zone. Now, if it may get rejected though in one of these other levels. It may get rejected at $52 or $53 or $54. These are other key levels, resistance levels where it may get rejected. So we'll see what happens at the open tomorrow. All right, so that's going to be critical for me. And then last but not least, NKTR. Yeah, it's an expensive stock, but guys, remember, as your account increases, you're going to get leverage. And just because you have the leverage doesn't mean you're going to lose all your money. It's so stupid. Like, people are ridiculous. There's nothing wrong with using leverage if you have a risk management. It's just stupid. Don't listen to these idiots that tell you that. Now, this is a beautiful chart to me because you got clear levels of overhead resistance, right? And potentially dip buy. So you're going to say, well, more, if this stock gaps up at the market open tomorrow and it held 78.07, this level here, can I go long? Yes. You risk that level, or you could risk the level below 76.90, which is, 2 points. So obviously you're going to take less shares. So let's say like people use percentage when they do like their risk reward ratio. I use dollar amount. So for me, I don't like to lose more than $500 in a trade. Sometimes I'll risk 1,000 if the sweat setup is really, really sweet. So you're gonna say, all right, well, I'm not gonna risk more than what it would cost me to lose $500. So for me, I wouldn't be, for me, I may not, I don't want to risk more than, let's say, 500 shares, sometimes. But for me, to be honest with you, I go heavy. I'll go like me personally, especially when I short. I don't always listen to my own rules because I'm really just risking me. I'd rather just get out, like, if it can't hold a key level. So I like to usually take 1,000 share positions on these bigger price stocks, but it depends. It depends how much I transfer out of my account. I don't keep all of my profit in there. I move it out. So I usually like to have like 40-50 grand in at one time. But when you have leverage, you use it, and just risk off a key level. So for me, I would love to see, me personally, because I prefer shorting, is I would love to see this get back and retest. I would love to see this kind of retest this $80 level, get rejected, and then just fucking take a massive short, like 2,000 shares, and just go and get like fucking 8-9 points on this, or at least not. I'm exaggerating. At least 2-3 points. So even 1,000 shares, man, will get you 1 or 2 points. So, but I think that more than likely it's probably gonna get to the $79 level if it does test this, and it's probably gonna get rejected here and then just continue tanking. We'll see. Now, also you want to look at the yearly to see where's underhead, and the support, the clear consolidation is at the $69 level. So, if it can't hold, so my guess is, and I don't know, and anything is possible, but if it can't hold $75 tomorrow, this thing could continue tanking on a downward trend all the way up to $69, because people who are investors may say, hey, you know what, I'm not comfortable buying this stock unless I see, I'm not looking at this unless it holds $69. And that's when they think, all right, it's worth the investment to go back long, because they think the company's good and overall the long-term trend, it's going to be fine. That's how smart investors trade. All right. So that's what I'm looking at for tomorrow, guys. Now, there's a million other stocks that you could trade. Like, for example, I'm not going to trade it, but like an example, like CVS. All right. I'm just going to use this. I like to look for stocks also that hold their highs, because I'll give you an example. CVS. Right. And you could apply this strategy again to any price stock, penny stocks, sub-dollar stocks, $100 stocks. So for me, if, let's say this was a $2 stock, but this is obviously a $53 stock, and it, so what I would do is I would map my 53.30, right? Because that's the high. And what I'm gonna do is, all right, where is, let me pull up like the 5-day 5-minute chart, and I'm gonna see, all right, here's some consolidation, 52.89, and then there's some consolidation here at this 52.17, and then this was the breakout level here at 51.92. So if it broke 53.30 and held it, I would buy it, risking that. But let's say I have no interest in short selling, I just like to buy stocks. Well, I would look, me personally, I'm gonna look to see, is it gonna hold 52.89 to buy the dip, 52.17, or to me the most interesting potential area to buy the dip would be 51.92, because that was the level where it broke out. That was the key consolidation level. All right, and if it held, and I guarantee you that if this thing tanks, I bet you it's gonna hold 51.92, and you can dip buy it there, risking 51.92. That is how you dip buy stocks. That is how you look at it. The other way to dip buy stocks is you look on the daily and you look at a stock like potentially tanking, and you want to say, okay, where is the close price on the daily, and you can see if it can hold. Like for example, right here is, all right, it went from the high here was 49.12, so you can put a potential trend line here at 49.12 and say, and then create an alert to say, hey, you know what, I want to see how it reacts to 49.12, because if it got back down to 49.12 and held that, I could potentially dip buy at 49.12. all right, here's 49.12. okay, look, I didn't look at it, here it is. All right, here's 49.12. so 49.12 to me would be a key level for a potential dip buy if it got back down and held it, because that was the previous day's candles. That is where the high of the when it was on its downward trend. You see right here. All right, so I hope that makes sense. I hope that makes sense to you guys. All right, so that's what I'm looking at for tomorrow. This video obviously is longer than like usual. I always say I'm gonna make it quick, but I don't know, man. I'm passionate about this shit. I really love trading, and and I want to see everybody succeed and do well. And I got some exciting things that I'm working on. I'll announce them when I'm ready to announce them, because maybe things don't happen. We'll see. But I'm here with you guys, man. This is a community, and I want to see everybody win, man. Even though when in trading, when somebody wins, somebody else loses. But I want to put you in a position to really win, and I want you to really understand technical analysis, because most of these gurus don't teach this shit. They're terrible at teaching. They're not real teachers. So I hope this makes sense, and enjoy the rest of your Sunday. Like, subscribe, share. And come on, guys, look, this is embarrassing, man. Look at this. I'm not, come on, man. How am I only getting a video like this with all this gold, 330 views? That's sad, man. That's pathetic. Anyway, all right, guys, so have a great weekend.